Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. So today we again will take a look at the euro currency. You can see markets across the board have got some relief in the stock market. The Japanese yen is also turned to some retracement. Some kind of the overreaction was previously, as I said, it was simultaneously two events has happened that add fuel as to the gold market, as to the Japanese yen, is the drop on the stock market and simultaneously drop on the yields on the treasury bonds. That was the double impact for Japanese yen and for the gold market. So, but right now the situation turned to retracement. As I said, since this is not some kind of the run into quality, not run for liquidity as it was in the crisis in 2008, this is just normal changes in the global economy and the stage when the rates are rising and when the global economy is turning to from non-inflationary growth to the inflationary growth. So inflationary growth at the moment where central banks start to rise rates. Not just one central bank, but many others think about it. So although European Central Bank hasn't started yet the rate cycle, but they are coming gradually to this moment. So in this part of the cycle is major changing of the tendency happens on the stock market. As bond rate increasing, the stock market starts to feel the pressure and gradually is turning first to the flat action, but later it will turn to the downward action. So turn to the downward cycle. And then the time of the bond purchasing will happen. So in the moment when the rate increase cycle will come to an end, this will be very high yields on the bonds, and it will be more and more demand for the bonds, and investors will start to buy a lot of bonds with the anticipating of the rate decreasing. As you know, when the rate starts to decrease, the bond price is rising. So this opposite direction, opposite relation between the yield and the price. So that will be the final stage of the cycle when this rate starts to drop. Then again, the zero cycle and so on. So that's what we see right now. So right now we stand at the beginning of the inflationary growth when the stocks just starts to feel the pressure, but it doesn't mean that stock market will collapse immediately and will drop to the 50%. Absolutely not. This will be a rotor for back and return action somewhere around the previous tops, made deep fast retracements, but later this will be buying. They will be buy out by the new traders who will step in. So this will be an extended period of time. Now, let's go back to the euro currency. What we have actually, guys, yesterday our trade has completed perfectly. So you can see our market has reached our area. We said that 123 probably will be the floor for this week. Here, market just has some minor room to move slightly lower because for today our result stands at 2280. So that's mostly in agreement with the 123 FIB support. What's more important, guys, this market has formed this high wave pattern. So high wave is not the directional pattern, but the extreme points of the high wave are very important because depending on the breakout, the next action should happen. So if market will take down this bottom of this high wave, it's probably downward action will continue. This indicates some kind of indecision. But overall context still stands bearish. So in fact, trend still stands bearish on the daily chart. Market shows inability to continue upward action immediately because we know that market stands at monthly confidence resistance, and also bearish reversal pattern has been completed and market hasn't quite reached yet the target. So minimum target of this butterfly will be, as we said yesterday, 120, 150. So mostly on the daily chart our context for trading stands bearish, so we need to search chance to go short. But still, the momentum of the previous action is rather strong. As you can see, market shows very deep retracements here. It's almost returning back to the top. Here again, I suspect that here some deep retracement could happen. So what we have on the 4-hour time frame chart? On the 4-hour time frame chart, we see that market has completed our ABC top target perfectly. We said 123.20 will be the target. There was even slightly lower area, and as a result, market has formed nicely looking bullish engulfing pattern. This bullish engulfing suggests some upper direction. So usually the distance, the target of this pattern equals to the length of the bar. It means that we could suggest somewhere 618 retracement of this most recent leg down. So where the next opportunity to go short probably could appear. We do not know definitely whether it will be a good moment to go short, but what we do know is that this pattern hints on a deeper retracement up. The one moment here is a bit worrying stance is that this possible bearish grabber. So keep an eye on this, because right now I will explain you, I will show you the possible trade on the hourly chart for those of you who trade on intraday charts. But this pattern will be very important, because if market will form the bearish grabber here, don't be long. Wait when the situation will be resolved. Either if market will move higher and erase the top of the grabber and just will continue to move higher, or if it starts to work, it's really, these lows could be taken out before retracement will start. So this moment is very important. Now, what the trade could happen? So if you'll take a look at the hourly chart, on the hourly chart, guys, so we do not need this OP target anymore. We could delete this extension. So as you can see, potentially, guys, here market could form kind of the head and shoulders. So deep drop here, retracement, so left shoulder, head, and here market could form some kind of the ABCD pattern down, right to the 50% support, maybe slightly low, maybe 618. So that could be, I just put the 50% because it stands in agreement with the AB equals CD action. So market will form here ABC, top, downward retracement right to the 50% support. That in turn could give you the Gartley's triple to buy. So this could become the opportunity to go long on the intraday chart. And the potential target of this head and shoulders will be this A, B, C top, D targets 124.50. Take a look at 24.50. The target of this head and shoulders stands very close to the major 618 resistance, 124.56. So that's what I am talking about on the daily chart. That upward retracement could be deep. That is a suggestion that really could happen. But as I said, keep an eye on this possible grabber. If it will be formed, in this case, this could become kind of the butterfly or something of that sort. So market could really take it out of these lows. So you could plan your trade, but keep an eye on this grabber. So you need to either it will be erased by the following price action, just moving above this top and raising grabber, or maybe it will not be formed at all if market will close above the MACD, if trend here will turn bullish. So this is important moment that you should keep an eye on. That's our view on the euro currency right now. So we are keeping an eye on this possible bullish reversal pattern that could trigger minor retracement up. As soon as it will be completed, we again will return back to the idea of the possible taking the short position on the euro currency, because major reaction on this pattern on strong confidence monthly resistance hasn't happened yet. So that's just fluctuations inside of this consolidation that we see.